Ladies and gentlemen, welcome one and all to the Admiral Markets Market Pulse weekly update number 31 for the 18th of June 2025. I hope you're all well. I hope you are have enjoyed these rather eventful week, and I hope that wherever you're joining us from, that you are safe and well. It has been yet another eventful week in what I did say would be an eventful year. But welcome to you all for watching this, whether you're joining us here on the live session or you're watching this later on demand. It's great to have you here. As always, there is plenty for us to talk about, so why don't we just get on with it. As always, we'll look to begin with a quick risk disclaimer. Just you can take a moment to make yourself aware of that, just remembering that trading on margin does involve risk and that ultimately you are responsible for your own trading and investment decisions. As always, with our agenda, what I want to be able to share with you is how to understand and analyze global financial markets. I do recognize that if you're at the start of your trading and investing journey in what has been an eventful year, it might be a little bit difficult to make sense of what's going on in the world. It could seem a little bit overwhelming or a little bit intimidating. And so I'm here to help you understand and analyze those global financial markets, so that investors and traders can turn that analysis to your advantage. And of course, we'll also be talking a little bit about how you can trade and invest with Admiral Markets. So, as I said, always plenty to talk about, whenever short of topics to discuss. But as always, if there's something you'd particularly like to see me cover or focus on in the future, then by all means, please let us know and we'll be happy to build that in. For those of you who don't know me, my name's Paul. I've traded and invested for many years, traded for funds and clients. Okay, primarily I focus on FX, indices, and commodities for my own trading, where I'm a trend trader for my longer-term swing and position trades, which feeds into what we talk about here. And I'm more of a mean reversion and reversal trader for my shorter-term trades. When it comes to my investing, very much about new trends, intuitively adapting to the markets and having some specific sector focuses, which I find are of interest to myself, but we'll talk more of that later. As always, I appreciate that for some people, not only are you at the start of your trading and investing journey, you are also at the start of your journey with Admiral Markets. And so I'll just always help explain who Admiral Markets are and actually how we can help you on your trading and investing journey. Admiral Markets is a financial brokerage that provides access to a wide range of financial instruments and various asset classes, and also providing a comprehensive education suite, including webinars such as these, to help you on your journey. As I said, there are regular webinars with market experts providing live market analysis like what we'll go on to here at the moment. You also have access to the premium analytics portal on the client dashboard. There is also the opportunity to access the research terminal, which can plug into both MT4 and MT5. And there is a whole wide range of educational content, both on the Admiral Markets website and also the Admiral Markets YouTube channel, that cover a wide range of trading and investing topics. And so I would commend you to check them out as part of your own learning and education. For those of you who are more focused on the trading pathway, Admiral Markets provide over 4,000 available instruments as FX and CFDs on commodities, indices, and stocks, giving you a sophisticated trading environment with standard leverage for retail clients, providing the ability to engage with markets using either MetaTrader 4 or MetaTrader 5, and also the Admiral Markets mobile app for those of you who like to trade on the go. For those of you who are more focused on a longer-term investing pathway, Admiral Markets provide access to over 4,000 available stocks and ETFs, providing the access to fractional investing in both fractional shares and fractional ETFs. There is an auto invest capability in the mobile app. And for platforms, you can either download MT5, as you'll see I use myself, or there is a web trader based version, or you have access to the Admiral Markets mobile app. So, as I said at the start, this has been a rather eventful week in what has been an eventful month, an eventful quarter, an eventful year. And as I said, we do realize that if you are at the start of your trading and your investing journey, it might be a little bit overwhelming or intimidating to try and make sense of what's going on in the global markets, and furthermore, see how you can turn that to your own advantage as a trader or as a longer term investor. Hence, for our regular weekly webinar series, and where we help focus on helping you navigate and make sense of the global markets, and also help you filter out the myriad of information that comes our way as traders and investors these days. So every week we take a look at the major themes, news, and narrative that is affecting markets for this week forward. So from here today, from the Wednesday 18th June, for a week forward to next Wednesday 25th of June, involving analysis of major global markets, discussions about trading and investing, and my own experiences and thoughts, and also showing the technological solutions that are available to you as a client of Admiral Markets UK. Whole idea is to help educate you and provide insight on markets and the way that traders and investors can engage with them. So one of the first parts of that is, as I said, understanding the kind of the news, the narratives, and the themes that we have going on in the markets at the moment, and actually, trying to make sense of it, trying to sort of put that into an analysis that helps us. I say every week, and I make no apology for it, that if you're at the start of your trading and investing journey, I wouldn't expect you to be able to understand and analyze every bit of economic data, but I would expect you to know when the formal economic data is being released. The reason being is that as the major economic data is released, it generally induces volatility into a market. Volatility is a double-edged sword. When you're on the right side of it, it makes for a great trading session. When you're on the wrong side of it, it can make for a challenging session. So it is in your best interest to understand when the formal economic data is being released. And you can find that out from an economic calendar. There is an economic calendar on the Admiral Markets website and elsewhere on the internet. So there is no excuse, okay, not to sort of tap into the economic calendar at the start of the week and at the start of the day, or even the start of the session if you are of the shorter term trading nature. But even that, I do realize that in itself, the economic calendar has a huge range of pieces of information that are being, put out every day. So what I try to do here is just to sort of focus down on some of the more important elements so that you're in a position to understand, the impact that data has and where we should be focusing our time and energies. So what have we had today? Well, today, this morning in the UK, we had CPI, okay, the inflation numbers. The inflation numbers, I think they came out about 3.4%. They were the same as last month, okay, even though last month they sort of they started out saying that it was like 3.5%, but actually they sort of realized they'd made an error. So we are still really at 3.4%, so the same as last month. So the overall number has not seen any major change in the last month, which is a little bit challenging, okay, for Mr. Bailey at the Bank of England, which we'll come on to more in a moment, but also for the present government, because invariably they want to be able to cut interest rates in order to basically help consumers, to help voters, to help businesses carry on. However, it makes it hard for the Bank of England, who have their policy rate tomorrow at midday on Thursday, to basically to cut interest rates when inflation does not appear to be falling in terms of the big number at CPI. So it puts both the government and Mr. Bailey at the moment in a little bit of a quandary. And what that means is that, as you can see there, tomorrow we have the GBP policy rate conference, we are not expecting a cut tomorrow. If there was to be one, because they want to get ahead of challenges in the economy, that would put the cat amongst the pigeons, for want of a better phrase. But we will wait and see. Most people are not expecting any cut in interest rates from the Bank of England tomorrow. Central banks. This is a very, very heavy week, okay, for central banks. We had the Bank of Japan yesterday, who made no changes. We have just had the FOMCs coming out as we speak here, and just checking that is that there was no change. We just want to check. Yeah, there was no rate change there, but to be fair, there wasn't really expected one. What people will be interested in is they will be interested in Mr. Powell's statement, okay, in his Q&A session in about 20 odd minutes time. I think that will start, and that's where people will be interested in, okay, to see what he has to say and give an explanation of his decision. Then later on this evening, we have the GDP numbers coming out of New Zealand, and overnight into the morning, we have Australian employment numbers. Tomorrow morning, we have another one of the central banks. Okay, we have the SNB, the Swiss National Bank. They have their policy rate, their conference. And unlike the Bank of England, unlike the Bank of Japan, unlike the FOMC, the SNB is expected to cut interest rates tomorrow. They're expected a 25 basis point cut from 0.25% down to zero. It might be said that they're actually on a journey towards negative rates again, somewhere where they were a couple of years ago. So people will be keenly interested in that. And then, as I said, a couple of hours later, we have the UK policy rate announcement, and Mr. Bailey at the Bank of England will be giving his insight there. Then on Friday, we have UK retail sales, 7 o'clock Friday morning. People will be interested. People are expecting those numbers to be considerably lower, and that is important because the retail sales gives us an insight into the strength and the confidence, or the lack thereof, in consumers and the UK economy. So, for those of us who are very UK focused in our sort of trading and investing, that will be supremely important to us. There is also Mr. Ueda, the governor of the Bank of Japan. He will be speaking on Friday as well. He'll probably be giving a bit more information update after the Bank of Japan meeting that we had on Tuesday. And so naturally, people are going to be keen to hear. Whenever you hear one of the main central bankers speak, you'll find the traders and investors are keenly interested in what they have to say. That takes us into next week. And normally, as you hear me say, normally Mondays are quite quiet in terms of formal economic data. But this Monday, 23rd of June, will be a little bit different because we have the broad range of the flash manufacturing and service PMIs, okay, purchasing managers index numbers from, as you can see, for the French, the German, the overall Euro area, and the UK in Monday morning. And then in the afternoon, or our afternoon here in the UK, you'll have the US equivalent as well. So, I say it every month when it comes up. If you are looking to start your insight into economic data and being able to analyze it, PMI is a good starting point. Even though it is a little bit of a lagging bit of data, it still gives you a snapshot, a sense of the strength or weakness of a particular economy. And as a starting point, it's a good starting point because really PMI is all about the number 50. Any number above 50 shows you that part of the economy is expanding. Any number beneath 50 is that part of the economy is contracting. So it's a very quick snapshot, okay, into that. And then, of course, once you're able to relate it to the last couple of months, well, then you can start to get an idea of the trajectory and you can get an idea of the health of the overall economy. So it's a good starting point for people at the start of the journey in terms of starting to understand some of the economic data. Tuesday of next week, we've got Canadian inflation numbers. So we've got all the variations of it, the median, the trimmed, the common, monthly, and the annual. And there is also consumer confidence from the US on Tuesday afternoon. As I sort of said about UK retail sales, there is still that insight into the strength or the lack of in consumer confidence. Okay, certainly here in the UK and in the US, as consumer economies, the strength and the health and the confidence within consumers is supremely important. And if, as we have seen, that sort of ebbing away, well, then invariably traders and investors are keenly aware of that. And there is also next Wednesday, there is new home sales in the US. Okay. And once again, that will be another indication of the strength of the American economy. Some of the data recently has been, somewhat um, somewhat to the bearish negative side, and so those new home sales numbers will be keenly watched next Wednesday. So there is, as I said, the kind of the week's news, all right, for the weeks ahead, and then it feeds into the kind of the narrative and the themes that we see going on. I appreciate that whilst that is the formal economic data, we also have, as very clearly shown in this last week, the geopolitical tensions that we have. And then on top of that, almost as another layer, we have President Trump and his access to social media. And we now live in a world where that is something that traders and investors have to take into consideration. It's something that you have to build into your finding a way to keep yourself on top of not just the formal economic data, but also understanding geopolitical tensions and also President Trump's preponderance to signal policy or decisions straight to the masses on social media. So hopefully these webinars will help you with that. Okay, but equally in between our Wednesday webinars, as I said, you just need to keep on top of President Trump's tweets. Okay, because that might give you insight into why market might particularly move. So, and before we switch across to the charts and have a look at what's going on, you know me, I'm always like to set expectations, okay, for whether you're a trader or an investor, set a baseline, okay, set some standards that, I would be expecting from people, namely risk management is absolutely key. So it's important that you honor it. If you're at the start of your journey and don't fully understand risk management, as I said, there is a broad range of educational content on the Admiral Markets website, on the Admiral Markets YouTube channel that you can tap into and that you can use, okay, and learn from. It's important to know what news is coming out for that week ahead, and thankfully we've just gone through that, but it's always important to know that. I say it every week, where possible, especially for the kind of longer term position traders and investors, ideally conduct your analysis before making decisions. So for myself, as I say, I do an awful lot of work off the weekly charts. I really like weekly charts, and what it does, it means that normally on a Saturday morning for a couple of hours, I sit down and do my analysis then. Markets are closed, there's no distractions, there's no candles moving, there's no major formal news coming out. So I can just sit down, do my analysis, and then from that, create my plan for the next week ahead on how I want to engage with markets. Goes without saying, you should have a good internet connection and that you should ideally be rested and prepared for the session ahead. And as a point of note, remember, for long-term trading and investing, we are looking to be long-only buyers through the invest.mt5 account here at Admiral Markets. And if you just want to understand my charts, okay, what I'm talking about, try to understand them, you'll see my charts are quite simple. Blue or green bullish candles, red bearish candles, a blue 20-period simple moving average, a red 50-period simple moving average, a green 200-period simple moving average, and some grey fractals. So hopefully that can help you just understand it if you're new to joining us or new to trading and investing. And let's get ready to switch across to the charts. But as I said, I appreciate that some people will be aware that Admiral Markets, what they offer as a trading brokerage, but also these days Admiral Markets provide an investing account, okay, that allow you to buy the UK shares and ETFs that I mentioned in this webinar and on other sessions. You can open an invest.mt5 account, okay, by logging into the dashboard. Then basically you can open either the web trading platform or, as you see me, download the MT5 platform, and then you would engage with the UK shares and ETFs as you would normally using MT5 if you're using that for your trading as well. So it provides you the opportunity to engage with the UK specific stocks and ETFs, but also through a comfortable platform in terms of the MetaTrader 5. Okay, so with that in mind, let's switch across to the chart, shall we? Let's have a look at what's going on there, and just bear with me a moment. And what we'll do is we'll switch across to the chart. So just bear with me a moment. I'll bring up the charts for us here so we can see. Bang. Okay, so let's just move this around a bit so you can see a little bit clearer, hopefully a little bit better. I'm going to put these on the weekly chart to help us make a bit more sense of what's been going on. Okay, so just to help explain to people, what I have here is I have the MT4 platform, Admiral Market MT4 platform, which is what I use for trading. And then I use the invest.mt5 account for longer term position trading. Okay. The reason being is that I find for myself that actually having the hard boundaries between my kind of, let's say, my trading pathways and my investing pathways is what helps me. Okay. Trader Paul operates differently from investor Paul. Okay, that's the way I would try and explain it too. So here what I have is, as I said, this is the MT4 platform. What I'm going to do here is, yeah, I'm just going to show. Oh, this is an indices profile that I have here. Okay, an indices profile, and it has the Dow Jones on the weekly, the SP 500 on the weekly, NASDAQ on the weekly, the Australian ASX 200 on the weekly, the German DAX on the weekly, the FTSE 100, the Japanese 225, the Nikkei on the weekly, and then the Hang Seng HSI 50, which is the Hong Kong index. Okay. So, as I say, I have these here and you can see them on the weekly chart because it gives me a really quick snapshot of the global equity indexes. Okay. Very often we will see them move in unison, or rather, where the American indexes go, others follow. Right, that might be a little bit of a clearer way to talk about it. Even in the kind of volatile times that we live of, where is the strength, where's the weakness, and where I want to particularly focus my efforts. So we can see that this is probably, I'm going to use this as a little bit of an interesting point. This is the Dow on the weekly, and we've been talking about how we were just kind of going a little bit sideways, maybe heading up a little bit, and then with the events of the end of last week, that's where we sort of sold off there. But interestingly, this week we've started to come back, and it's probably easier if I go onto the daily chart. Here we go. The daily chart here, as you've heard me talking about, for the last couple of months, really, price has actually just been grinding its way high. And this is the Dow on the daily, but just grinding higher. I think I might have even mentioned I was really pleased and interested with the sort of the daily 20 period moving average. See the blue simple, how it's acting as dynamic support there. And then you can probably see, okay, where last week, sort of Thursday night, Friday night, we had the events in the Middle East, the geopolitical tensions, and we can see that basically price just, really dropped down there. We can see where we closed, we can see where we opened, but actually, we kind of rallied back up there. And this is the kind of interesting element for us. If I just go down here to the hourly chart here, this is the kind of interesting element. So this was kind of the Thursday. This is the hourly chart. Then Thursday night into Friday, we dropped. We tried to kind of rally a little bit Friday morning, but then we dropped again. This is where we closed on Friday. This is where we opened up. And many people would have expected the selling to continue, everyone going into a risk-off environment. But President Trump, tweeted, I think it was like the Sunday night, Monday morning, about how he was hopeful about a peace plan. And that was enough to actually get markets to basically have a bit of a relief rally there. We had a little bit of a relief rally, which was quite surprising. And then as tensions reignited, or that we have seen basically price drifting a little bit lower here. So it was fascinating to see that Trump's tweets had the ability to sort of help markets just rally like that. But as people have worried about contagion, okay, from the present conflict, in terms of it just broadening just from the two protagonists at the moment, but also invariably there's been lots of talk about whether America will get involved, and if that, as I say, widens the war further. And that is when we've seen these elements, that when we're seeing these kind of sell-offs here, That's what people are worried about. That's what people are worried and concerned about. My own view is that I think I think we probably this whole week we will play out, and then I think perhaps maybe by the weekend, okay, we might have a bit of a clearer picture of what's actually happening and what are the likely end games that we see in sight. But certainly, for if I just go back up to the weekly chart, certainly the strong sell-off that people were expecting this week has failed to materialize, and we can see the same on the S&P 500 and also the same on the Nasdaq. It has failed to materialize. Okay, and that in itself is quite a fascinating insight. Okay, into markets that markets almost take a position that because it was just two protagonists, firing at each other, that basically the markets weren't actually that fussed about it. They were, but what I mean is that the intensity, okay, of the kind of risk off fear that people are expecting failed to materialize, and that in itself is a kind of an interesting point. Um, Interestingly, last week, those of you who joined us last week, you remember we had a look at the ASX, okay, ASX, the Australian, okay, index. And the reason we were talking about it is because last week it was coming up here to the all-time highs. This was the weekly chart. We come to the all-time highs earlier in the year. We had fallen away, as you can clearly see, after the sort of the Trump tariff tirades. But then actually we rallied back stronger and actually traded a little bit higher. And for those of you who remember, I talked about how go down to the daily. Let's go to the daily chart. Yeah, I was talking about. I'm always interested. What does price do when it gets back to these levels, or when it gets to big round numbers? This had been like those American indexes. It had been quite a really quite a nice trend. Okay, just grinding its way higher, operating at around about a 45-degree angle. So not in kind of like almost like at a Goldilocks pace, okay? Not too get the old one, not too hot where we see price going into a parabolic move, okay? But that means it comes down, or not too slow, where it basically is just moribund in the way it's operating. It's kind of about it's about a kind of 45 degrees, all right? Goldilocks, Goldilocks trend, okay? And then that's as traders and investors what we like to see. But as I said, I'm always curious what happens when price gets back to these levels, and that provides me trader Paul with an opportunity. And if I go down to the 4-hour chart, yeah, boom, that's nice. If you remember last week, I was talking about, I said, what, I think this is printing now a double top here, and I think we'll take it. There'll be some profit taking here. There'll be some sort of, a little bit of a retrace, and that's what we've seen for this last week, haven't we? That's been, a really nice double top. Double top is a simple reversal pattern. If you look, it just couldn't close above the highs. That 4-hour chart just could not close above the recent highs. Okay, pushed up to it, and then it's been pushed away, and it's come back down to this kind of level here. Now, let's draw it on here. I'd be looking at this here. I just need to. Maybe that's not the ideal. That's not the ideal site. Let me just change it. I have different colors for different kinds of trend lines here. Okay, there we go. So, to me, it would look just a little bit like there is a kind of there's a support level there around what's that around about 85.25. I might be watching that, okay, to see, does it actually hold out? Because I would be looking at, so let's say, is this coiling up again? Is this something like FOMC or some major news announcement? Is that going to be enough to basically be the catalyst to make the next shove in the ASX? Because if it departs 85.25, I think 84.25, whether 4-hour 200 period moving average, that starts to come into play towards the end of the week. So that is one bearish scenario if we're about to do that. So yeah, I would just be adding that to my watch list and keeping an eye on that. A little bit closer to home, another index which has kind of rolled a little bit off the top, or at least taken a breather, is the DAX. DAX, as we can see, this was a lovely double top here. Okay, like what we just saw on the 4-hour ASX, this was on the weekly DAX. We fell away, rallied up, and if you join us, we talked about how we'd got to highs. I was saying the price action, it's bullish, maybe not the most exciting, but it was holding above those recent highs. until last week. Okay, until last week, and then if I don't get onto the daily chart, last week, here's the daily chart. It had basically, I've just been talking about you want a Goldilocks. This had been strong, but it actually started to ebb, hadn't it? We'd had here. I talked about how I like seeing the 20 period moving average acting as dynamic support. And here it is support. Here it's flipped. The wick can't get above and close it, and then we had basically 5 days of sell off there. Okay, now interestingly, I think part of that is an element of euro strength. All right. Remember the DAX Germans, they love to have an export economy. So the stronger the euro gets, okay, the sort of less competitive their products, okay. And a BMW is already expensive, and if the currency exchange makes it even more expensive, that will invariably have an impact upon sales. So that's what we have seen here. Okay, we've seen that drift its way down, all right, on the DAX. Okay, and if I go down to let's go down to the 4 hour chart again. Yeah, on the 4 hour chart, it looks like a considerable difference, doesn't it? That is, last week we just really continued to sell off. This would have been the sort of Thursday night into Friday, the sort of geopolitical tension sell off. And we did try to pull back. We did rally up a bit, but you can see it's sort of kind of dropped its way down there again, hasn't it? And once again, maybe there's an element of support here. Maybe that the world and his wife is waiting for FOMC and B to see what, if anything, Mr. Trump actually does in terms of in terms of those geopolitical tensions, whether he ratchets them up or whether he manages to calm them down. We shall have to wait and see, won't we? But there you go. That's the DAX. The DAX, that kind of it's certainly the short term trend is to the downside, is whether that will follow through. Talking about levels, FTSE. Okay. We said last week, okay, about how FTSE, was not as exciting as the ASX or the DAX in terms of the strength of its come up, but we were talking about how it is still just underneath its highs there, isn't it? Just underneath those kind of recent highs. Once again, the daily chart, it's just been grinding up, hasn't it? Just grinding its way up there, okay? But it hasn't, I said when we were down here, I said it would act like a magnet, but we haven't actually punctured it per se, okay, on this chart. If we go down to the 4 hour chart, what I'm looking at is, what I see there is we have not been able to puncture that level. I would look at that as a bit of a double top there, okay? And I think interestingly, what we might do is I think maybe it's a level 88.25, 88.20 there, okay? I would be interested. I'd be looking at this to see what happens for tomorrow lunchtime. Yeah, it is Wednesday evening. Thursday, we'll see what Mr. Bailey and the Bank of England have to say for themselves, okay, tomorrow lunchtime. If there was a surprise cut, I think the initial reaction might be to push up towards there, okay? But it depends on why there is an initial cut, all right? If they think inflation's beaten and they're cutting for that reason, well, that could be positive. If they're cutting it because they're worried that the economy is about to stall and go into recession, I think that would probably have the opposite impact. So, my view is here, we're probably just sat in this block until lunchtime tomorrow, okay? And we'll see what occurs there. So, all eyes on the FTSE, okay, over the next 24 hours to see, what that actually tells and how that looks to play out. And then once we're here, okay, I know a lot of people love I love gold, okay, they love either trading or investing gold. So let's have a look at gold here. Let's go up to the weekly chart first. So, yeah, great trend, okay, great trend. Bear flag pattern there, that we a bull flag pattern that we talked about. Sorry, it's been a long day. Bull flag pattern which we broke out of, and I was a little bit worried or concerned that maybe we weren't going to sort of make highs from this. But if I go down to the daily chart, okay, we rode our way back here, but once again, I think I said a couple of weeks ago actually that the 20 period moving average had been acting as dynamic support. I was going to see was that going to continue, and actually that's what happened here, and then basically what we saw here, what we started to see here was this was invariably the this was the kind of geopolitical tension playing out. Okay, remember that geopolitical tension, not unsurprisingly, to find markets buying gold. What I was interested in as a shorter term here is actually, when we came up this week, yeah, there we go. I'm just going to change that to change that different color. All right. Come on. There we go. I appreciate that gold might not necessarily stand out too much here, but it's only really to show that what happened is we rallied our way up into last month's high. Okay, last month's high here, and you hear me say it, I'm always keen to know how does a market react when it hits new highs, okay, new lows, or previous highs, or monthly highs, weekly highs, daily highs for the shorter term. And hence why I was kind of curious to see what happened. So if we go down to the 4 hour chart, this was the latter part of last week. Can you see how gold was rallying? Real uncertainty, okay, tension, just had people buying gold. And we ran up to, where did we run up to? Last month's highs. And then we closed here on the Fridays, bit of a double top there, okay. And then on Sunday, we gapped up, okay. That's why we're seeing that is that, we've closed here on the Friday, and then invariably we've gapped up on the Sunday when the markets opened. Okay, Sunday here, but Monday morning in the Pacific or the Asian area. But actually, look at interestingly what had happened. Remember, we just said that Trump's tweets sort of Sunday night, Monday morning had taken an awful lot of the sting out of it, and we can see Monday and Tuesday start this week, gold just really fell away there, didn't it? And now I look at that as the kind of gold is sort of it's a little bit squeezed there, isn't it? In between the kind of the 20 and the 50, waiting for FOMC, okay, waiting for Trump to say what he's going to do, waiting to see how the geopolitical tension plays out. So that's why we've kind of had like a couple of days of just sideways on gold. And I think what will happen by the end of the week, we'll have had a breakout if there is continued uncertainty, if there is no peace plan, if America chooses to get involved, then I think we see probably gold work its way up. If there is a peace plan, okay, or if there is a coming together, or if there is an end to the hostilities, well, then actually I would see probably gold drifting its way there. Okay, so um, we are a little bit what's the word? We're a little bit at the mercy of the news there at the moment, okay, to see what happens. But I will have a scenario to work out and understand. But this is how I'd expect markets to play out. It's not it's not a forecast. It's not a recommendation. It's just a scenario. Just looking at okay, if X, Y, and Z happen, then I would expect markets to do A, B, C. Okay, and I would respond in line with that. But that's what I think I see there on gold at the moment. Okay, so we've had a look at indices. We've had a look at gold. So let's now have a look at the US dollar. Excuse me. So what we do is you always have a look at the indices, gold, look at the dollar, look at sterling, and then look at the UK stocks. Okay, so I'm just going to update these here. Boom, boom, boom. Um, it has been the dollar's been a rather interesting and good trading session for me this week on an intraday basis. But we're just going to watch out. Here we go. Let's have a look at the dollar as always. I'm looking at the FX markets. I'm starting with the dollar index. Okay. And that we've talked about, dollar has been bearish. All right. And that bearishness it continued here. And, I talked about it being caught between about 98.50 and 100 in a block, but it broke out of there, but it does look like it's returning to it. Okay, you have to start thinking: is this a bit of a much bigger double bottom being played out in the dollar index? Certainly, for the last couple of days, having flushed these lows, we've kind of had a little bit of a little bit of reversal now. Okay, there's that old English saying of one swallow doesn't make a summer. For me to say that there is dollar strength, if returning, I need to see us get above that ledge, and also get above the daily 50, and then really get above 100, the big round number. That's what, for me to really talk about dollar strength, okay, the dollar returning, that's what I would need to see. And the same with gold, looking at that kind of, scenario. And certainly that has done that, but equally, this could be, let's just see what we're like in the 4-hour chart. And maybe in best day. But what I also have to realize is that this distinct possibility that, excuse my artistry, as I say, I'm a better trader than I am an artist, so just bear with me a moment. But here we go. So it could be, well, actually, Paul, is this a bear flag just building up? I think we'll know up here, okay, up above where the 20 and the 50 is. If it comes in there where this kind of ledge was here, let me just extend that a little bit longer. To me, that kind of area there is what's that, around about 99.35, 99.50, could be an area where we get to an inflection point. Does it actually have the strength to carry on above 100, or does it just give like rejection candles, like big engulfing candles or pin bars? In which case, I think we'd be pushing to those lows again. So the trend is down, okay, but the last couple of days we've had a little bit of relief rally, okay. And I think a lot of that is, well, there is the US data, but also a little element of that is, of course, there's geopolitical tensions and people deciding what is Trump going to do? Is he going to stay on the sidelines, or is he going to get involved? So then with that, you're then looking at, okay, well, how's that impacting something like the euro against the dollar, and the kind of the flip side inversely correlated to the dollar index. And you can see we have been in that strong trend. We've been up there this week at the moment. That is an inside bar pin bar. But remember, this is Wednesday evening. All right, this is Wednesday evening. This doesn't count, close for another 2 days. So I look back and I start to look at, well, hang on a minute. We've just talked about, was there a bear flag on the dollar in bear flag on the dollar index? Well, is there the possibility of a bull flag forming on the euro dollar? I'd be kind of, once again, in terms of my scenarios, I'll be looking at the 20s up there. Okay, you've also got the sort of pivoting the big round number of 115. Is it a case we get down there and then we move higher from that, which would indicate dollar weakness, euro strength. So that is one scenario I would look at, and I would just keep an eye on. Remember, tomorrow is all about kind of the Swiss and the UK. But then after that, people might start to sort of refocus on A, what the dollar's doing, but also B, what the euro's doing and stuff. And so I will be interested to see if that is a thing. Let's just have a look on the yeah, it's kind of yeah, interesting. You can listen, you can see for most of today it's gone sideways, sat at 115. Sat at 115, so I was in the run into FOMC. All right, that's not a massive shock, really. What I'll be interested to see is how traders and investors interpret Powell's comments, and whether that gives them sort of dollar bullishness or dollar bearishness. We will see, and it is that dollar which is what will influence this euro. That's what I think that's what we'll see happening. But we'll just keep an eye on that. Because while that's been happening, if we look on the bigger picture, Aussie against the US dollar continues to run higher, so that's dollar weakness, Aussie strength. Kiwi dollar, okay, continues to go higher, all right, even though there's starting to wicks form, but remember, this is only the Wednesday candle. Dollar against Canadian dollar has continued to sort of drift its way lower, so that's dollar weakness, Canadian dollar strength. Pound against dollar is going higher, but we'll look at that because that might be changing as well, certainly more to do with sterling. And then dollar against Swiss franc, okay, has been drifting low, which is basically dollar weakness, Swiss franc strength. The kind of one that's been interesting is, we talked about this last week, was here the dollar against the Japanese yen, okay? Dollar against Japanese yen. And we're talking about how it had just kind of really gone a little bit quiet here. And I thought kind of running in towards, you had, Bank of Japan yesterday, FOMC today, and I thought that might be the catalyst to break us out. But so far, as you can see, not really been the case, is it? It's still coiling up, I would suggest. Still coiling up. And maybe it'll be overnight and through tomorrow that people will start to re-examine and relook at where they wish to go. But I would look in that coiling. I'd be looking. We're above the 50. Maybe it's a case of we are going to see a little bit of dollar strength, and that would be for me what I would want to see is a breakout of it, test, and then up to this kind of 150 number, daily 200, that which would also get us above here. That would actually give me kind of a sense of sort of yen weakness, dollar strength. But we'll just have to wait and see, won't we? It's tightening there. Okay, we're just gonna have to wait and see. Just gonna have to have a bit of patience and watch it play out. Excuse me, but it is a reflection of the kind of weakness of the dollar and the Japanese yen that we've experienced for the last couple of months, and that is just another reflection of it. And yeah, we're just gonna have to wait and see how that blows itself out. So there you go. So there's the dollar for us. Let us now have a look at sterling. I'll have a look at sterling, and then we'll have a look at UK stocks and see what the score is there. Okay, so boom, 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 boom. Um, Okay, so this is my, here we go. Bang, just bring up the drawing tool here. This is my British pound profile. So I've got pound against dollar, pound against yen, euro against sterling, pound Swiss, pound Kiwi, pound Canadian dollar, pound Aussie, and the FTSE. Okay, so we looked at the FTSE earlier, didn't we? So why don't we just put these all on to, I'm going to put these on today, but we'll probably end up changing them as we go, as we talk and chalk our way through here. Yeah, so yeah, that's actually giving us a good indication. Right, pound against dollar. I think it talked about what I've been talking about was that I was kind of keen. I thought, maybe we were starting to sort of see pound against dollar as high as we had been. I think I was talking earlier this week on to my other clients about how I thought, bang, we were building a rising wedge here. And the rising wedge, very often, you'll get like a pump out and then a reversal, or in this case, it just breaks down as it has done. Okay, and this week has not been a great week for sterling in that sense. And if we just zoom into it, we can see that yeah, we can see. Whereas, yeah, on the weekly chart, okay, it's looking like we're rolling over, but last year's high, last year's high is still acting as a support. Here we go. For me, we've got, as I said, we've got FOMC today, UK Bank of England tomorrow. If those are negative, then I think I'm looking at price having to break that daily 50. This is the red 50 period moving average. It breaks that, it flips it. Well, that becomes very bearish, and then we start to look at, are we going to likely move towards 130? Remember, a lot of this strength in sterling has been more down to anti-US sentiment. Okay, it's been more of a dollar trade than a pro-UK trade. So if there is something that happens that provides a little bit of catalyst for people to be long dollar again, I would expect this to unwind pretty quickly. I mean, it already looks like it already has. I was trading this earlier this week and stuff. Here we go. Let's go to the hourly chart. Yeah, we can see. Boom. Yeah. So we had Thursday, Friday sell off, Monday a pump up, and then literally, we've just literally dropped our way through there. Okay, yesterday afternoon in particular, there was kind of a real strong sell off there in sterling. Really kind of dropped its way. Today has been a kind of bit of a nothing day, but that isn't a shock really when you're running into FOMC and Bank of England. Not a massive shock to see that occurring there. Okay, we'll just see whether that follows through over the next day or two. If we look at pound against yen, that's interesting in that if I go to the weekly chart, yeah, the weekly chart, we talked about this kind of long trend line here on the weekly chart and about how we were butting up against it, and a break above it and a move above it was kind of a risk on ideas, and a drop away from it would be a bit risk off. And this week, what we've seen is we've tried to push higher, and it's just rolled around and fallen over. If we go down to the daily chart, yeah, it looked like we were breaking out here, okay? It looked like we were breaking out and going higher, but actually, as you can see, we've just literally, yesterday. We reversed that pretty quickly, and today's a quiet day, but it's still kind of a little bit of a follow through. Yeah, there we go. 4 hour charts. Okay, we dropped there at the sort of at the end of last week, which is a reflection of kind of, let's say, the risk off from the geopolitical tension. Then we rallied up, but then, as you can see for yourself, we've just fallen away. And I'd be intrigued to know whether tomorrow's data is enough to keep that kind of moving in its direction. If we look at that as well, that get the same idea for pound against Swiss franc. So this is the daily chart. Those of you who've joined us for a few weeks have been talking about how we were just in a block here, okay, for about 3 weeks. That's what was interesting to me, was that there's a couple of things. Is that for my own model, the stamp pound and Swiss franc were 1 and 2. So I don't tend to trade strength v strength. I want to trade strength v weakness, and this was actually a really good example of what happens when you've got two strong currencies together. They just literally pivot and bounce about. But equally, this was also a risk on or off trade. This was row. So, of course, sterling is seen as a risk on currency. So if it had pumped out of here to the higher, that would mean we're in generally risk on environment. If we pump lower, that would mean that Swiss franc is strengthening, and that would mean there's a risk off. So far, you can see this week we've kind of broken out of that and dropped our way. The interesting thing is, of course, we've dropped into this block. Tomorrow morning, we've got S&B, then Bank of England. So, I would not be trading this overnight. All bets are off until after that kind of American, not the American, the S&B and the Bank of England do pull their elements to tomorrow. Okay, and that will give us an indication of what we're likely to see. Certainly, yeah, a 4 hour chart. Okay, for the last since Thursday, has just bounced around. Okay, so I'll come back to this tomorrow to see what has actually happened there and how that has played out for us. Condols, interestingly, what you see is normally we'd be seeing, pound yen and pound Swiss dropping. That would be an indication of risk off. But actually, what we are seeing here is, if you look at this, pound against Aussie has dropped. Okay, that is sterling weakness. Okay, Aussie seen as a risk on currency, and equally with Kiwi, that's what we've seen there. Okay, that's basically, this is showing us more sterling weakness. Pound against Canadian dollar has carried on down. Now, that I wouldn't be surprised about anyway, because of course we've seen a bump in the price of oil. All right, because of geopolitical tensions, Canada has a great relationship in terms of CAD and oil. So as oil has strengthened, no surprise to see that Canada has strengthened and sterling has weakened. But that is, if we're looking at all of that, that is showing us that sterling has weakened against US dollar and yen, which have been the weakest, and also it has basically weakened against the condols as well. Just backing that up is the euro sterling as well. So weekly chart. Remember, we talked about the weekly 50-period moving average. Come back to it. Really nice bullish pin bar, and you can see we just bounced our way up from there. And I talked about last week about how I'd need to see us get above the 200, okay, but above that kind of 200, be happy above 85 for it to be bullish. Go down to the daily chart. On the daily chart, okay, we came down to that 84 level, 200 period moving average, big bullish key reversal, and we've just worked our way up. We're above the daily 50. We're working our way higher. Then that is euro strength and sterling weakness. Okay, perhaps more sterling weakness than anything else. Just what we have seen here. Hopefully you can see that has given us an indication that kind of that sterling strength for the moment is a little bit done and dusted. All right, that's a little bit over. All right, for the last few minutes, let's just have a quick look at some UK stocks. Okay, so I'm going to switch across to the MT5 platform. Okay, so as always, you can plug in the Admiral Markets Research Terminal. You can use this. It's got lots of different uses for it. Okay, let's get the data window out for the moment. But lots of different uses for it. But I like to use it for the corporate calendars to see when are the major elements being companies, UK companies, either either like these for tomorrow, 3i, British Land, Experian, they have got their ex-dividend dates tomorrow, or you have Informa, they've got their AGM and webcast, okay? And if you wish, you can find the chart, or you can actually trade through it straight into it. There, I appreciate for some people that is a kind of interest and of kind of use um, to people and stuff. So, but if I just go back to the calendars here, I think yeah, we've got dividends for HSBC and then Berkeley Group Holdings, BKG and IFF. So let's maybe we'll have a little look at maybe that's not what I wanted. Fine, maybe we can have a look at that in particular. Um, as always, okay. VUKE is the VUKE is an ETF of the FTSE 100. And you can see, interestingly, that has pushed to these highs. Okay, and remember we just looked at it on the CFD. Okay, on the kind of the chart there, it's just hanging around underneath. The kind of the ETF has already pushed its way, and that might give you a little bit of an indication. VMID, okay, which we talk about. VMID is the FTSE 250 ETF, okay, not the FTSE 100, FTSE 250. And even I was surprised at how quickly this came back into this range here. You can see it's really stuck in that range there. It's got back to it there quite happily. If we talked a little bit about a couple of the companies, okay, that had for example, they have done well. So, Chemring, okay, UK defence company, they make decoys, okay, like chaff and flares, decoys for military vehicles. You can see for yourself that has just basically, it's just gone absolutely esoteric, not the right word here. It's like a rocket ship, okay, like a rocket ship that's worked its way high, and that's what we can see from that. British Aerospace, that has done well. I thought maybe we're in a rising wedge there, but it's continued to move higher on that sort of defence element with that. Rolls-Royce, okay, is continuing to move high. That is still in a long, strong uptrend. And what's kind of maybe interesting for us to look at is Metro Bank, MTRO. And the reason for the interest in them is, let's just zoom in a little bit, it is that boom. I think we talked about this kind of last year in terms of, let's go to the monthly chart, Paul. Is that, yeah, is that it had rather a fall from grace there, okay, a few years ago there, okay, quite a fall from grace, and had really gone sideways, pivoting around 100 pence, around about £1. But when you go down to the weekly chart, we can see that having dropped our way from that, we really sort of kind of traded our way back up to the 100 period, the 200 period moving average. It was really undervalued and worked its way up. And then we've continued to sort of just grind our way higher. This here is, let's just say it is most definitely, a bull flag. And what has occurred is that we have seen there is now a bid for Metro, okay, for an organisation wishing to buy it. Hence why we have seen I just done to that. Hence why we have seen on the daily chart. Hence why we've seen the blowout of that bull flag. And me, what I say is that if I am in a flag, I always like to see it ended by like in this case, like being a bull flag. I want to see it ended by a bullish pin bar, a bullish engulfing candle to show the sort of buying power come back in, and that's where we stepped in. That's what we've seen there, and you can see that has really jumped there. So I would be watching this. I have this on my watch list, okay, just to basically see does it have the strength to continue and to work that way, okay, off the back of all of that particular um, off the back of, as I said, off the back of that, the bid for Metro. Metro were one of the new challenger banks, and so they had a lot of enthusiasm, a lot of interest. They still have a lot of loyal customers there, and it's a case of certain organisations would look at that and be particularly interested in them. So that is one thing that you might Metro, as I said, you might just want to watch how that plays out over the next couple of weeks. And then just very quickly, finally, because BT is one we've talked about before on the monthly chart. I talked about how, down at £1, there was support, okay, and we are definitely underneath the monthly 200, so there's a real undervalued, and looking at moving towards that, and you can see that has been doing that. We drew in this trend line. I said, as remember I say, how does the price react to it? And you can see it was a bit scruffy around it, wasn't it? And that was also when we had the Trump trouble. But you can see that basically BT continues. That I would look at that as a momentum trade. Okay, I'd look at that as a momentum trade with a target of what, about 225, 220, the sort of monthly 200 period moving average. And I think that's once again that's been working nicely for us. Okay, there, ladies and gentlemen. So time flies when you're having fun, as I always say, and unfortunately, we've come to the end of our time together. Nevertheless, I hope you found that session useful. I hope that has given you a little bit of insight and a little bit of a heads up into the news and also the basically how markets are playing out at the moment. As always, I wish you the very best of success in your own trading and investing endeavours. I hope that you'll join us next week on the 25th of June for the next of our Market Pulse weekly updates. And until then, trade and invest well, everybody. And I'll speak to you soon. Many thanks.